Hi, it's great to have you with us. I'm Lynn Ashmanoff from Best Cash Cow. Today we're going to talk about home ownership. It's part of the American dream, and getting a mortgage is probably one of the biggest financial decisions you'll ever have to make. So where do you begin? Let's find out. Here to let us in on all the little secrets is Jim O'Malley, a loan officer with Leader Bank. Jim, thanks so much for being here today.
Thanks for asking me.
Now, you've been in the industry for 12 years. You've seen a lot of ups and downs in the market. You know it's a lengthy and complex process to get a mortgage. Where do you even start?
The first, most important part of getting a mortgage today is determining your FICO score, what your credit score is. Credit-based lending is really the #1 thing that has come out of the mortgage crisis. So the first thing I encourage people to do is get a copy of your most recent credit report that you can get available free from any bank, or you can get it online. So to determine if there's any ghosts or any problems in the past that you should deal with before you attempt to get a mortgage.
What is the target score you're looking for?
Just about a year ago, it was 620 was the FICO score, and now it's moved up to 720. So to get the perfect rate, to pay no premiums on rate or anything, 720 is like your goal number. You can get a mortgage from 640 to 720, but sometimes you either have to pay PMI or pay a higher rate for it. Whereas a year ago or 2 years ago, 640 was fine. Now that's kind of the minimum score to get a really good rate.
I see. Well, 720, it sounds pretty high to me. What does your credit picture look like if you have that FICO score?
720 is basically you're using debt. You know, you've had a car payment if you're a first-time home buyer. You've had college loans. You have a history of paying back money, and you have no lates. You have no small collection accounts. You really, you have to be, today you have to be pretty clean for at least 2 years of showing, they want to see you borrowing money. They don't want you to say he's never borrowed anything. That doesn't help you either. But a credit history paying back of 2 years should get you around that 720 FICO score.
Okay. What is the state of the market today? Is it easy to get a mortgage?
It's still easy to get a mortgage, I would think, if you were looking at it. But the differences are, you need a down payment now 95% of the time. Mass Housing still has an excellent program, 100% down. But you have to have perfect FICO scores, and you have to have down payment. You have to have money after you close. So you may not need to pay any money down, but you'll still need money to make. And you have to earn a lot. There's no income verification loans anymore. So you have to usually have strong W-2, or if you're self-employed, you have to have about a 2-year working history of showing the bank that you make money before you qualify for a mortgage.
Okay. Is the demand for mortgages high in Massachusetts?
It's very high right now. The first-time home buyer program that the government has started, which people get $8,000 when they buy their first home, is ending in the end of April. So the demand right now for pre-approvals and buying homes is very, very strong. It's probably been as strong as it's been in the last 3 years. People have this urgency, especially on the low end, if you're paying up to $300,000, to say, geez, this $8,000 would be really helpful to me. And historically, the rates are very low right now, so if you can get low prices, low rates, and $8,000 back to the government, it can really be a factor for you to buy by the end of April. You have to go under agreement on the home by the end of April, so you don't have to close till June.
Okay.
But the actual process of getting the mortgage and everything has to be started before, I believe, April 30th.
Wow, okay. Now you mentioned rates are low right now. Is that an impetus for people to do they need to hurry and get a loan now, or are they going to go up?
I think the rates will go up slowly. The government's been buying back mortgage-backed securities for the last 15 months. So that's ending at the end of March.
Okay.
So I don't believe that the rates are going to go from 5 to 7 in the next day in April, because the demand is the overnight lending rates for banks is still very low. But our economists are telling us that in the future we should expect higher rates, because when Uncle Sam is buying the mortgages, it's been really a motivating factor for the banks to write a lot of loans. So as the first-time home buyer ends, and the buying back of the mortgage-backed security ends, the natural, and plus the inflation of lending all this money, the general theory is that the rates will definitely go up in the future.
Okay. Well, how does the environment compare to 2007 before the crunch?
The #1 thing is no income verification. you have to have a job now, a W-2 or a tax return, as I said. And so that's eliminated a lot of self-employed borrowers who actually had great credit and had money to put down, but their tax return didn't reflect their total package. So now you really need to be strongly backed up by finances, whereas that was, you know, the nature of being self-employed in New England and stuff. A lot of entrepreneurs and stuff. There was a big market for it. That's all gone now. So you really need to. It's probably knocked out 30% of buyers because they just don't have the financial wherewithal to get the mortgage or qualify for the standards that we're looking at right now.
Have you seen a big drop in home values here in Massachusetts?
Not really. I do it by the area. So if you're inside 128, it's been pretty stable. It's the Newtons of the world, even in the city, it's been pretty good. Maybe less than 5%. And then as you go between 128 out to 495, I think it's more significant. Maybe 5 to 10. These are just numbers. But then once you get beyond 495, where people have to commute a long way, the prices have really come down quite a bit. People want to live closer to Boston, so it's kind of like the buffer of like the less that you have to commute, your house probably went down less than someplace out in Worcester County or something where the values have dropped significantly.
I see. Well, what are some of the things people can do to increase their chances of getting a good mortgage?
First thing is address your credit. Like if you have a small collection account from Verizon that's like $20 or something, that can damage you as much as being $300 late on a credit card. So collection accounts, small accounts that you neglect as a young person because it's just like an annoyance to you, you should really address those quickly so that when you go to get the mortgage, you're presenting a good credit score. And again, with the free credit report, there's no reason not to do it. And then you can kind of get a picture that if I pay all these bills and I get myself straightened out, you can give yourself a plan maybe 6 months from now that you'll be in a financially good place. The old days there was mortgages you could write with a 570 or 580 FICO score, but those are all gone now. The companies have all failed, so the availability is gone.
For sure, definitely.
So,
well, Jim, thanks so much for being with us. A lot of great information.
All right, thank you.
And thanks so much for watching. For more information on mortgages, continue to search through our site, bestcashcow.com. I'm Lynn Ashmanoff. Have a great day.